Good afternoon, good morning, wherever you are. Thank you for joining us today for Danos Group, the Danos Group's second official crypto-focused webinar. We're thrilled to have you with us for what promises to be an insightful discussion on compliance, regulation, and investigative trends across the ever-evolving digital asset space. And we absolutely have a fantastic panel of speakers here today, who I will come on to in a minute, but I just wanted to start off by first introducing the Danos Group to you. My name is Handelaar. I've been with the business for close to 6.5 years, and I'm Global Head of Danos Consulting. The Danos Group has been operating for 21 years, and we specialise in governance, hiring across globally into financial services. At Danos Consulting specifically, we help firms with one-off SME support from specific regulatory needs to sickness and maternity cover type roles. But we very much also have the capability to stand up larger scale remediation teams, with the largest being a 39 consultant project across the US for a global crypto firm. I'll now hand over to my co-host, Lucky, to introduce himself and the other arm of Danos. Thank you, Lucky.
Hi, everyone. My name is Nguyen, and I've been with Danos Associates for 2.5 years, and I've been recruiting and compliance for the last 11 years. I lead our U.S. compliance recruitment initiative, partnering with top financial institutions across the United States. For those less familiar, the Danos Group is a global specialist recruitment firm with offices in London, New York, Singapore, and Hong Kong. We focus exclusively on mid to senior roles in compliance, financial crime, legal, and risk, and that focus is what truly sets us apart. Before we hear from our incredible speakers, just a few housekeeping notes. Please remain muted so we don't distract the speakers or anyone listening. Feel free to have your cameras on. It's nice for us and the speakers to see some of your faces. And if you have any questions, please use the chat function and we will do our best to ask them to our panel.
Thanks, Lucky. Okay, so our first speaker today that we're delighted to welcome is Iggy Azad. Iggy is a Senior Director of Investigations and Intelligence at Coinbase, who he has been with for close to 6.5 years. Prior to this, Iggy had a decorated 20-year career with the Metropolitan Police Service. Iggy moved to the National Cybercrime Unit, where he served until 2019, and during this period, he became an experienced financial investigator. He first began investigating illicit use of cryptocurrency in 2014. Iggy brings a wealth of experience in digital asset investigations, financial crime, and threat intelligence. So let me hand over to Iggy to speak.
Thank you, Bradley, and the Danos team for one, introducing me so very, very eloquently, and two, for giving me the opportunity to speak to all of you around some of the experiences and some of the tools, techniques, and trends that we're currently seeing at Coinbase. So to give you a bit of a background as to my role at Coinbase, we are the interface between law enforcement and Coinbase, dealing with all requests for information globally. As Coinbase is present in over 100 different countries, we have to deal with a plethora of different law enforcement agencies, each with their own nuances, foibles and peculiarities and experience as well. In addition to that, our team also conducts their own investigations, from internal referrals, from the fraud team, compliance, security, as well as outwardly looking for intelligence and investigative opportunities to then refer to law enforcement to try and get rid of some of these bad actors in the environment. I started in Coinbase in 2019. It was, I think, hopefully the panel will agree, a very, very simpler time, where most of the time we're just looking simply at Bitcoin. But in that time, the economy, the landscape has evolved exponentially to now we're in a multi-chain environment. When we talk about the tools and techniques and trends that we see, we have to look at it from that perspective. Whereas before, we would simply be dealing with Bitcoin, one-to-one transactions, or very, very simplistic transactions from one exchange to another. Now we're in what we call a multi-chain world. With a multi-chain world, we need to invest in multiple different types of tooling. There are multiple different types of blockchain analytics tools, or tools that can decipher the blockchain and provide you with, for example, an entity's name, patterns of transactions, volumes, and the types of different transactions that a particular address or wallet has undertaken. Some of these tools are stronger on some chains and weaker on others. As I alluded to, we're now moving to a multi-chain world. The second biggest blockchain is probably the EVM, or Ethereum virtual machine-like chain. So Ethereum, Arbitrum, Avalanche, etc., where you can conduct much more complicated types of transactions. And those complicated types of transactions may not be discernible to the novice, for example, which is why we need these tools to help us decipher this. And on any particular day, I'll use several different tools, from Chainalysis, TRM, Elliptic, to some free tools as well. So don't think that not having a paid for subscription to tool is a block to you investigating the blockchain. There are many, many good free tools out there that we will use. For example, MetaSleuth, Falcon, Etherscan, Arkham Intelligence. These can help you decipher some of the signals and transactions and the volumes on the different chains to paint a picture of illicit activity and help you in your investigations. But we don't just rely on the tool providers. We also, as I said earlier, conduct our own intelligence. A lot of the basis of investigations in cryptocurrency is attributions. Who is controlling this address? Who does this address belong to? And that comes from traditional investigative techniques like open source intelligence gathering, going out into social media, conducting your own research to identify who is behind a particular address. We can also make test transactions. If, for example, we are interacting with another service, make a transaction. The transaction flows using those different tools I mentioned will allow you to unearth the structure that that entity uses in terms of how they structure their transactions and their wallets as well. That helps you with attribution, both for good and bad actors. It's not just about the bad actors. Identifying your counterparties can help, for example, with market analytics, who your customers are interacting with a lot more. So there's applications aside from just investigations to criminal entities. As I said, we move on to more complicated transaction construction. I mentioned several years ago, we were just simply looking at relatively simple transactions in Bitcoin with some mixer uses. So a mixer, a Bitcoin mixer, obfuscating the source and destination of a particular transaction. Using the different types of tooling gives us that insight into the more complicated transactions. For example, we can now swap, bridge and swap in one transaction, provide liquidity. There's multiple different types of ways in which you can interact with the different products and services out there in cryptocurrency. But we also like to bring in some of our traditional techniques. So accounting techniques like first in, first out, last in, first out, highest in, first out. Those accounting techniques can help us focus efforts when faced with addresses or entities with a high number of transactions or significant volume. Customers have also become much more sophisticated in the way they use cryptocurrency, moving from simply centralized exchanges to maintaining their own wallets as well to interact with different products and services. One thing I would say is when you are faced with something new, do your own research first. It is a mantra within cryptocurrency, going back to the days when Bitcoin first started. DYOR, do your own research. You can understand a lot about a service by interacting with them, conducting your research on them. Who is behind them? Test transactions, identify wallet infrastructure, reviews of the service. There is a whole host of information out there that can help you understand what a service does and how it operates. One thing that I have noticed is too often investigators solely rely on the blockchain intelligence for their assumptions or their suspicions. That's a very narrow focused investigation. It's not taken into regard the wider set of circumstances or facts that may be uncovered through traditional investigation, like research, open source research, reaching out to a partner VASP or other entity to see what information they have on the counterparty. And also, don't be afraid to say, I don't know. The coverage of analytics tools is probably around about 40 to 45% across all chains. That means there's a host of addresses out there that we don't know much about other than their volume and transaction activity. So there are a lot of unknowns out there. If you don't know, say so. Do not be afraid to say that. And as I said, don't be afraid to reach out to other companies, whether traditional finance or other cryptocurrency companies. We do on a daily basis to understand more about the investigations and subjects that we're investigating now. Hopefully, we'll get to the same sort of level as the US with their 314B system. In the UK, under ECCTA, there are implementations for a similar type system where private entities can then interact with other private entities to obtain information on customers. Hopefully that will help with the collaboration that is sorely needed within this space. And lastly, moving on to some of the trends that I've observed. A lot of the time we're investigating investment scams or account takeovers where the funds are moving into stable coins. With investment scans, it's USDT, and it's onto what we call the Tron network. And it moves from established coins like BTC, Bitcoin, or ETH, or USDC. Many of the lesser known swap services are being utilized for this routing of funds, such as DeFi, Hi-Fi Swap, ODOS, as they provide much more bespoke services where you can, as I said, swap and bridge in one transaction, reducing your fees. Criminals, much like us, don't want to lose value, which is why they move into the stable coins such as USDT, which is a high level of adoption and accepted in many different exchanges, both within the Western world, but also within Southeast Asia as well. One thing we've seen as well, with, for example, the recent Bybit hack, was the use of ThorSwap to move funds from Bitcoin to ETH and vice versa. At the moment, a large amount of those funds is just sitting there waiting to be moved because of the huge amounts that they stole. With account takeovers, Monero is seen predominantly used, but again, with EXCH, a no KYC exchanger, being shut down recently, the exit ramps for Monero are fast declining. So those are some of the trends that we've seen recently. And what I'd end on is investigations within cryptocurrency can be very, very complicated, but with the right tools, right mindset, they can be traced and you can uncover the individuals behind it.
Thanks, Iggy. Next up, we have Barnett, Director of Regulation and Compliance at Chainalysis, where she has been for nearly 4.5 years. Prior to this, Caitlin was U.S. Chief Compliance Officer at Bitstamp and Deputy Chief Compliance Officer at Gemini. Her insight and views into how compliance frameworks have begun adapting and evolving over the past few years, as well as how the rest of traditional finance has been reacting to crypto, is incredibly timely. Over to you, Caitlin.
Thanks so much, Lucky, and thank you to the Danos group for having me. Very excited to be with both Iggy and CJ, who have been longtime players in this industry, so really happy to chat with you all. So like Lucky said, I have been with Chainalysis for about 4.5 years, and prior to joining Chainalysis, I was actually a customer. But before I jumped into the fun, crazy, ever-changing world of crypto, I was in traditional finance in a number of legal and compliance roles. And so here at Chainalysis, I work really closely with mostly our private sector customers navigating this ever fun changing world of crypto compliance. And I would say 2025 has been a much different year for traditional financial institutions to get into this space and to get a bit more comfortable. So I'll give you a brief overview of what Chainalysis is for those of you who might not know. Really appreciate the plug, Iggy, on Chainalysis and kind of explaining blockchain analytics to start, because I think it's such a crucial piece within this industry, and it really is game-changing technology from a compliance and investigative perspective. So for those of you who might not know us, we are a blockchain intelligence platform for investigations, risk, and security. We service both the public and private sector, so work really closely with exchanges like Coinbase and Kraken, but we're also working with government agencies, regulators worldwide. We have over 1,400 customers across both public and private sector customers. We have identified over 11 billion in illicit funds that we've helped to recover, and 9 out of 10 of the largest exchanges rely on Chainalysis for compliance. So the way that I like to think about what Chainalysis does is essentially acting as a phone book for the blockchain. I think crypto has always gotten a bad rap for being anonymous, and that the only use cases for crypto is for illegitimate activity. And while we definitely see illegitimate activity taking place, it's no different than fiat, right? And so the difference with crypto, in my opinion, is that you have blockchain analytics tools like Chainalysis that Iggy was alluding to, where you can follow the flow of funds. So in traditional finance, cash is king, right? Once you start dealing in cash, you can't trace it. But like Iggy said, even with this most recent Bybit hack, we might not be able to identify who has the funds right now, but we're able to continue to watch them and make sure that when they do go to a cash out point, we have some type of measure in place that, law enforcement regulators can then go and proactively try to seize those funds and try to disrupt that illicit activity. So really, really powerful technology. And there are amazing use cases. And I think to Iggy's point already, early days when I first got into the industry, 2016 was way easier because we were only dealing in Bitcoin. We didn't have all these nuanced types of investigations. And multi-coins and things becoming way more complicated. But with that, blockchain analytics has really stepped up and tried to help, our customers and be at the forefront of this technology. So I'm going to take a little bit of a different approach to talk about some things that I'm seeing in the industry from the traditional financial perspective. You have longstanding players like Coinbase and Kraken who have been doing amazing things in the crypto industry. And I think they kind of gave a little bit of FOMO to the traditional financial sector where they realize crypto is not going away. They need to figure it out. And I think in the United States, at least post November, with the new administration coming in, we've seen a much different attitude towards crypto, where we see traditional financial institutions thinking that they can start to interact with crypto. And so they're trying to figure out how they can do that in a compliant way. I'll give you just like some brief stats that Chainalysis has. So in addition to being a blockchain analytics provider, we use that information to put out a bunch of reports throughout the year. And one of our biggest reports is called the Crypto Crime Report. And every year we assess how much illegitimate activity or illicit activity is happening on the blockchain. And since 2020, that has always been under 1%. And it's still trending in that direction. So in 2024, the illicit activity was 0.14%. So that's really amazing to think about, when all we hear is the bad stuff in crypto. On the whole, it really is not that bad. And again, because of the use of blockchain analytics, you're able to see where the funds are going to, where they're coming from, and how much illicit activity is happening. Now, I won't just pretend that it's all great. Obviously, there is illicit activity, just like in fiat. And so the illicit activity does continue to exist, and there are different areas that we're seeing become more problematic. And I think over the past couple years, we've seen an increase in scams, unfortunately. During COVID, we saw a huge rise in scams coming up, and that has not gone away. Pig butchering has been, kind of the topic du jour for the past year or so. And we're getting a lot of education out there, which I think is super important, because the people that are getting targeted with these types of scams, they're just not familiar with crypto. And so I think they're more susceptible to some of these kinds of risks. And so the more education that we can get out there, I think the better the industry will be as a whole to stop and potentially prevent some of this from moving forward. But again, global crypto activity is increasing, and it's not stopping. And we see crypto as strategic technology far beyond just crypto trading. And I think that's been really evidenced by the huge adoption of stablecoins and having, the tokenized US Treasury market as well. So we're seeing these different real world use cases utilizing crypto, not just from a trading perspective, but again, as we get more traditional financial players in the market. Stablecoins, I can't have a conversation with any traditional financial institution without talking about stablecoins. And I think we're seeing a huge, forward momentum in terms of regulation progressing. And so stablecoin adoption is going to continue to rise with that regulatory clarity. So already we've seen policymakers make significant progress with the expectation that you can map and understand your token ecosystem. So stablecoins really unique in that not only can you monitor the primary market, so think of your issuances and redemptions, but you do have the ability using blockchain analytics, again, to monitor this secondary market. And because stablecoins have the unique ability to be frozen or burned in the wild, it provides a unique use case for blockchain analytics to be used to monitor that secondary market and really focus on those high threats from a national security perspective. So banks in the digital asset economy, we saw Fed Chair Jerome Powell come out and say that banks can serve crypto clients if risks are managed adequately, which I think is a huge switch from what we've seen over the past couple years in different administrations in the United States, at least. And so again, this is giving traditional financial institutions some greater clarity and greater comfort to start interacting with this asset class. So high level, there are 4 different trends that we're kind of seeing within financial services. And so I think the first overall thing that Chainalysis gets involved with, and I'm sure both Iggy and CJ can attest to this as well, is education is a huge part of interacting with the traditional financial sector, right? I think, again, crypto has notoriously had a bad rap that it was only used for illicit activity. And unfortunately, like when that's all you see in the headlines, that's kind of what sticks with you. So a big part of what Chainalysis does, and I know CJ and Iggy are probably doing the same thing, is a lot of education, right? And just trying to explain why crypto is not that bad. What are the use cases that it can be used for? So a lot of banks, even before the new administration came into play in the US, we've seen a lot of the major financial institutions start to try to get crypto ready by educating their teams and taking trainings and joining webinars like this and things of that nature, so that when they do get the green light, they're ready to go and they're not starting at ground zero. So for the past 4.5 years at Chainalysis, I've definitely been working with every major financial institution you can think of to get them essentially crypto ready before they're even actually touching it. But what are the ways that we're seeing financial services start to get into crypto? So one of the easiest ways I would say is banking crypto businesses. So whether that's providing an account, a loan, or advisory to both blockchain and crypto related businesses and individuals, we're seeing a huge uptick from traditional financial players start to get involved there. And Chainalysis is trying to kind of ease that concern around the illicit activity piece by showing that the overall illicit activity is really very low. So not to pick on CJ, but say CJ is going to, try to get a bank account at a traditional financial institution. CJ can show Kraken's overall risk exposure and say, hey, look, like we really do not have a ton of risk exposure. And when we have had exposure to potentially illicit sources, this is what we did about it. And we're using these blockchain analytics to get ahead of it. And it's a much different due diligence perspective than TradFi is used to, because you're limited to documentary evidence when you're onboarding a customer or doing any sort of due diligence. But what we're doing at Chainalysis is showing, look, like not only are you going to collect your documentary evidence, but let us help you supplement that and essentially give you a snapshot into their bank account to show if they're following their policies and procedures that they've told you they're following. So again, a lot of education there, but I think people from a TradFi perspective, I think they have one of two reactions when they see blockchain analytics. They either love it and it's their light bulb moment that, wow, this technology is amazing. And that was my light bulb moment when I first saw it. I couldn't believe that I was clearly seeing funds were going either to a good source or an illicit source. And I could very quickly make decisions, file SARs, offboard accounts, instead of doing, Google searches to figure out what is Caitlin Barnett LLC and is she shady and what is she doing. It's just a much clearer way to conduct investigations. Or they're terrified of it because you are seeing so much information. And unfortunately, once you see something, you can't unsee it. So those are the two gut reactions that I think we get when we start showing blockchain analytics to people within the traditional financial sector. Hopefully we'll start to get more people have their light bulb moment when they do see it. And I will say, I think the majority of people do have that light bulb moment, and we're definitely getting away from this is scary, we can't handle it. So that's the first use case that we see a lot of. The second use case would be crypto and token custody. So we have seen SAB 121 get rescinded this past year, which was amazing. And it provided kind of an entryway for banks to start thinking like, okay, we can actually do this. There aren't a ton of burdensome regulations that are going to prohibit us from that. So what does that look like? It's, providing safekeeping and asset servicing for cryptocurrencies, tokens, or stable coins. We're seeing banks and broker dealers get into this. One of our really well-known customers who did this, Bank in New York, the oldest custodian in the United States, they were one of the first traditional financial players in the US to fully take on crypto custody. And it was an amazing journey to be part of, candidly. There's a lot of education, like I said, because you're dealing with more complex, more bureaucracy, where you have legal, you have compliance, you have risk, you have sanctions, and you're trying to get all these people on the same page. And then they have all their risk committees that they have to present to and get buy-in. And so, I really do feel for all the people who are pushing for these initiatives at the traditional financial institutions, because it's not just a, yes, we're going to do it and this is how we're going to do it. It's a huge process to undertake. But again, we are seeing a ton more adoption in terms of crypto custody, which is really exciting. And it's providing more options. We can't just have one or two providers that are doing this because of the concentration risk. We want to be able to have more players in this market who are regulated, who will be able to, service all of the customers within the ecosystem. The next area that we're seeing a ton of interest in is stablecoin and stablecoin financing. So whether or not that is someone looking to issue a stablecoin or to finance stablecoins to support market stability and liquidity. Like I said, I don't think I can have a conversation with any traditional financial player or even cryptocurrency players, to be quite honest, without mentioning stablecoins. And again, I kind of, alluded to this earlier, utilizing blockchain analytics to both issue a stablecoin or to even provide the financing around stablecoins is really, really unique. So banks are looking to hold the reserves of stablecoins, and they're trying to understand, we're hearing all this bad stuff about a number of stablecoins. What does the illegitimate or illicit activity look like? What can we do about it? How can we get comfortable for even holding the fiat reserves for that stablecoin? And again, utilizing blockchain analytics is super powerful because you can monitor the entire ecosystem, and every single type of product that Chainalysis offers is fully customizable to whatever your end risk appetite is. So I think that's super important because CJ's risk appetite might be way different than Iggy's or mine, or, we all have our different risk appetites. We're all developing new products and solutions, and CJ's use case is going to be very different than Bank of New York, as an example. So super important that blockchain analytics to be thought of as a data set that can be fully customized to whatever product offering you're looking to get into. The next area that I can't have a conversation without talking about this topic is tokenization. So we're seeing, the launch, sponsor, or administer crypto-based products and tokenized financial assets. The ETPs that have launched have been super exciting. Every asset manager is looking to offer ETPs, I think, on every different asset that's out there these days. And again, like Iggy said earlier, way different than the early days when we were only talking about Bitcoin. We're seeing huge demand, and it's an easier way for the, more novice retail consumer to get exposure to crypto by, purchasing these ETPs rather than, actually going and having to figure out how to buy and hold cryptocurrency, what might be a little overwhelming or a little scary to players who are just getting into this space. And then the last area that I'll talk about from traditional financial perspective is fraud prevention. So Chainalysis has been involved within the risk and compliance space for quite some time. But obviously, with the rise of scams and things of that nature, we've seen fraud and security become really, really relevant topics. And so one of the theses that Chainalysis had was that we had to figure out more solutions within that space, so that we could help our customers continue to be proactive and try to prevent some of these things that are happening on these platforms. So Chainalysis actually made 2 acquisitions at the end of last year, beginning of this year, one of which is called Alteria, and it's a fraud prevention program. Very, very interesting because it's not only touching the crypto side of the house, but it's also working on the fiat side of the house. And essentially what they're doing is interacting with the fraudsters directly using AI so that we can gain insights into bank account information, email addresses, wallet addresses, and get that information to our customers so that they can be proactive and not allow their customers to send funds to these potential scammers. So instead of, getting an alert after the fact that, oh, wait, either the customer comes to you and say, hey, I was defrauded, or you're getting an alert that this wallet address is associated with a scam, you can upfront say, oh, wow, like we have this information, we're going to put it in our blacklist, and we're not going to allow customers to interact with this. I think this is particularly useful for traditional financial players who are, getting into this space and might not have the knowledge or the programs. I know both Iggy and CJ have blacklists that are enormous just based on the intel that they've gotten over the years from their customers getting defrauded or scammed. So this is just a way to enhance that program and to give people who are just getting into this industry a bit of a leg up, so that they're not starting from scratch. And then the second area that we invested in is a product called Hexagate, which is more Web3 security focused. And again, really timely. We had made the acquisition right before the Bybit hack happened. But a lot of the work that Hexagate is working on is exactly what would have prevented an issue like the Bybit hack. So super exciting that we have a lot of entrepreneurs who are building within this space and are looking for ways to continue to make crypto and blockchain a secure and compliant space. And I still think, like I said, I've been in the industry since 2016, and now 9 years later, I can't believe it's been 9 years. It's like dog years. It flies. I still think we're at the very, very early stages, and I'm really excited for what's to come. So thank you so much for having me, and I'm really excited to hear what CJ has to say next.
Thanks so much, Caitlin. A lot to digest there, but really, really amazing points as well. And if anyone, if you have any questions, I've seen a few start to pop up in the chat. If you have anything, please feel free to share. We do have a little bit of time to throw some questions out to our panel at the end. Finally, we're delighted to be joined by CJ Rinaldi, the current Global Chief Compliance Officer at Kraken, where he's been for just over 2.5 years. CJ has seen things from all sides of the industry, starting his career with the Enforcement Division for the US Securities and Exchange Commission, then spending some time with Clifford Chance before moving into the banking world with UBS. CJ was head of business line anti-financial crime compliance for Deutsche Investment Bank, and then MD and head of markets compliance for Deutsche Bank Securities, before making a move into crypto as chief compliance officer at blockchain.com in 2021. We're excited to hear his thoughts as a current chief compliance officer for one of the world's largest crypto firms and what it means for digital asset firms moving forward. So I'll hand over to CJ.
Thank you, Brad, and thank you very much to the Danos Group. It's a pleasure to speak with all of you today, especially alongside esteemed colleagues Iggy and Caitlin, industry experts. So what I'll talk about today are really three things. One is how crypto companies are bridging into traditional finance and payment services and reverse. Two, how to scale the program leveraging reg technology, artificial intelligence, and other smart methods that you can use to effectively scale up your program. And then three, the fact that crypto is moving so fast, and Iggy and Caitlin had alluded to this in their comments, and how as a CCO and trying to manage a team whereby crypto, which is open 24/7, how do you maintain effectively risk appetite and then manage risk appetite in a very dynamic environment, not just in a market dynamic environment, but also in a regulatory, quickly evolving environment. So starting with how crypto companies are bridging into traditional finance, what we're seeing very quickly is both TradFi companies, banks going into custody and leveraging blockchain technology. And we're also now seeing crypto companies moving into TradFi. So some crypto companies have set up US broker-dealers and broker-dealers outside the United States. Some, such as Kraken, have purchased companies such as NinjaTrader, which we purchased, which is a US futures commission merchant. And we're also moving more and more into the traditional payment space. And I think what we're going to see increasingly is peer-to-peer payments as consistent with licensing that's obtained globally. And so that's very exciting in terms of what's going on in the crypto space. And you can see there's a very clear, what I would say is a convergence, which many of us saw coming over time, and it's happening at pace. What we're also seeing is that people say, well, how do you get your head around all of that? How do you manage all that? And at the end of the day, I always say that, look, what applies in payments and TradFi also applies by and large in crypto. There may be other tools to manage those types of risks. However, the reality is that the same types of risks are there. So you have to apply common standards, meaning that FinCrime controls need to apply at crypto companies. And so we have sanctions and AML and fraud, anti-bribery, corruption, as you would expect to see at a traditional bank. We have common standards. We often have the difficulty whereby you're trying to scale your program and set up a common standard, but you may have uplifts in certain jurisdictions. And so we have to then effectively scale up the program to meet those jurisdictional requirements. We apply, as you'd expect, risk assessments and independent AML, sanctions audits. We do constant testing. And what I found as I've moved into this space is that testing is super important, particularly because a lot of what we do is fintech and regtech related. And so you have to make sure that your controls are really working, both on the user interface perspective all the way through client lifecycle to the back office, to make sure that effectively each leg of your journey, your customer journey, as well as transaction journey, is being tested to make sure that effectively it works, consistent with the customer's expectations, but also with your expectation to risk manage a program. We also are seeing it relevant to the convergence is that whereas maybe some traditional crypto companies, depending upon their business model, didn't have to worry so much about market conduct related issues, such as potentially best execution or wash trading and insider trading. What we are seeing is that if you're an exchange or if you're providing certain services, and if you're going to also go into TradFi, you're going to have to effectively scale up your program to provide for MiFID type as well as SEC type regulations relative to market trading. So it creates a big challenge, but if you have the right experts and you have the right programs in place, you can manage that effectively. In terms of the second item, scaling the program, leveraging RegTech and AI, what we've seen is that to really do this well, you need to leverage KPIs, KRIs, no surprise there, but really drive a data-driven machine so that you're automating all of your processes. Whenever anyone comes to me and says, hey, we have a new product, we have a new geo that we're going to go into, my first question to them is, how will you automate all of the flows front to back? And it's a really challenging question to get that right, because if you get it right, your program's going to work really well. Iggy had alluded to the fact that information is power and asking the question. So in compliance, we're always asking the business just to explain things better. And one of the things that we found is that we need to have a better seat at the table. To get the seat at the table, we restructured our org so that now we have a product compliance team that sits with the business and product. And from ideation all the way through product development and shipment, we are at the table, which is very, very helpful. We're also seeing really powerful tools come out. Caitlin had spent a lot of time talking about blockchain analytics, which is really core to our program and managing it effectively. We know the blockchain is permanent and immutable, and it allows you to follow the money if you could do so in a sophisticated way. What we're also seeing is really cool things such as VPN piercing. So it's becoming more difficult for criminals to hide. We're also seeing advanced geolocation controls being applicable. And that gives us the ability to really understand where people are, where they're logging in from, and why they're using our platform in different ways. Caitlin had also mentioned the fact that there's very sophisticated anti-fraud tooling that's being rolled out across different vendors, and we're utilizing that. We're finding it to be very, very, very helpful. And then finally, what we're doing is we're using a lot of artificial intelligence increasingly, both enhanced due diligence, SAR generation, horizon scanning, and a bunch of other use cases, which we won't going to get into. We don't have the time, rather. But content generation, big question mark in this space in terms of whether decision-making leveraging AI would be appropriate. Model governance that we have to think about in terms of setting up your program and effectively provability to the regulators, all sorts of big questions that I think that the industry will be facing very soon. And then to wrap it up and save a little bit of time for Q&A, we can see that crypto laws and regs are moving very fast. In Europe, you have MiCAR, which is being implemented, very exciting. MiFID-like regulations that are being implemented across the European Union. In the US, you have the SEC making changes very quickly. It was alluded to the fact that SAB 121 was repealed. So custody crypto no longer needs to be on the balance sheet for US companies. We're also seeing guidance that meme coins are not securities, and on and on it goes. So very, very dynamic. And then finally, sanctions. Whereas sanctions have been strict liability, and we know that that's the case, we're also seeing a rollback of certain sanctions requirements. So for instance, there is now a general license issued with respect to Syria. We saw Tornado Cash, which was being used for various mixing type techniques, is being effectively no longer designated as a sanctioned piece of software. So big changes happening, and to roll it all up, there was mention about the Bybit hack. Iggy had mentioned that, and Caitlin as well. We could see that because we're open 24/7, and because information is power, we could trace the money on the crypto on the blockchain. We've been quite successful relative to stopping a lot of the assets from moving down chain and effectively being off-ramped. We're also leveraging a lot of PPPs, so private-public partnerships. One of the reasons I'm wearing this suit, I usually don't wear a suit, is because I'm actually attending an event with the government as well as the private sector, because it's really important for us to be able to share information very quickly to stop the criminals and to safeguard the industry. with that, I'll pause. Lot to talk about. Very exciting time.
Thanks so much, CJ. We've had a few questions come through in the chat, and again, as we go along here, if anyone thinks of anything, feel free to post some questions through. We do have some questions as well that we were sent in beforehand as well, which I can throw out to the panel. I will just start with one of the questions in the chat that Kelso wrote in here. And again, I throw this to the panel if anyone wants to jump in, but is there optimism with the SEC just closing its roundtable series that TradFi, at least on security side, will figure out a workable framework to regulate crypto assets even in the DeFi space?
Maybe I'll jump in there. What we are seeing is obviously there's been a significant change of the guard, and what a difference an election makes, to say the least. And so we have high degree of confidence, at least in the U.S., that there's going to be very clear guidance around what is a security, what is a commodity, thus which regulations apply. We're also seeing, and we believe that we'll see what happens, what comes out of Congress, but there's a probability at this point that DeFi, consistent with how it's treated outside the United States, DeFi will remain effectively an unregulated technology. We'll see how that all works out. I don't have a crystal ball, but that's my best guess.
Yeah, I agree with CJ. I think everyone is cautiously optimistic that we're heading in the right direction, at least. And I think the news cycle that we've seen has been positive, and so hopefully we just continue down that route. But I wish I had that crystal ball too, CJ. We'd be retired by now if we did.
Thank you. And another question from the audience. Lamore has asked, how is Chainalysis integrated with TradFi AML tools like NetReveal and Nice Actimize? Perhaps maybe throw that one to you, Caitlin.
Sure. So we have partnerships with a number of the TradFi tools of the world. The one important thing to note that it is very difficult at this stage of the game to pair up the fiat and the crypto side of the house. So right now they are two separate workflows, but we have integrations that we can work with, pretty much everyone via API. So if there's a specific use case, happy to chat with you offline about it.
Amazing. Thank you. One question we had beforehand, and actually maybe I'll send this one towards Iggy. I can't see at the top there, Iggy, but I think you're still with us. Iggy, how does one best place themselves as a successful applicant for a job in crypto compliance investigations, and what would make them stand out amongst others?
So a lot of the time when we're looking at CVs, it's very much traditional finance, and then we ask the question, so what have you done in crypto? And it's a stunning silence. If you want to work within cryptocurrency compliance or investigations, make sure you've got the background, make sure that you've been in there, you've done transactions, you can read the blockchain, read tools like Etherscan. As I said, there are many free tools out there. That's what will stand out, make you stand out from other candidates and applicants. Having that resume of work, showing that you've undertaken self-study, independent study, and research. And above all else, having that willingness to learn and willingness to pivot, because as both CJ and Kate have both said, and you might tell from the bags in my eyes, the world of cryptocurrency is ever changing from 1 minute to the next, and it's a constant state of catching up, understanding new protocols, new products and services, and understanding how threat actors may abuse them. So those would be my 2 cents, but happy for CJ and Kate to throw their hats in the ring for that.
Yeah, I totally agree with everything Iggy said. I don't think you need to have a background in crypto to get into crypto. I think all of us started at some place, right? I had zero experience when I got into it in 2016. I think you just have to have a natural curiosity about yourself, willing to learn, willing to, accept you're not going to know everything, and come in with that mindset. Keep your mouth shut for the first 6 months when you get there, and just be a sponge. But yeah, there are a ton of resources. Like, look at this webinar as a great example. LinkedIn has turned into one of the best places, I think, to get any information on crypto or what's going on in the landscape.
The only thing I would add to what Caitlin and Iggy said is humility, which is kind of an extension of what Caitlin just said, as well as intellectual curiosity. And don't show up at an interview without having done your homework, which I think is what Iggy was saying. Make sure you've done your homework. You know the company, you understand their business model versus their competitors, and whether they're an exchange or they're a custodian or an infrastructure partner. And what does that all mean as a compliance officer? If you're going to come in, how are you going to add value? I think it's really important for you to connect those dots before you have the first conversation.
Yeah, agreed. And as a middleman, I think in some of these processes as well, we've definitely realized as we're introducing people from traditional finance into crypto opportunities, and firms aren't on the crypto side saying no to anyone, as you said, that hasn't had prior crypto experience. But what we have found is that those who haven't done their research, it's immediately the interviewer immediately realizes and kind of already their guard is up a little bit. You've got to have that interest, you've got to have that homework done if you really want to try and pursue that opportunity. So more questions come through on the chat in that time. I think one point referring to something that came up, this is from Shivanji, talking about Ulterior, are they using AI agents to talk to fraudsters? Can you share some light on new trends observed in investigations dealing with agentic AI-enabled scams and transaction anomalies? Who, maybe from the back, Caitlin, perhaps start with yourself.
Sure. And then I think, both Iggy and CJ can speak to this, even though the question was originally Ulterior specific. I think we're all seeing a huge increase in scams being powered by AI. But to answer the specific question around Ulterior, yes, we're using AI agents to talk directly to the fraudsters to try to gain insights in terms of, like I said, some of the PII type information, so phone numbers, bank account information, wallet addresses, email addresses, things of that nature, so that you can upstream proactively block any interactions with these potential scams that are targeting your customers. I think the scams, I kind of describe this as whack-a-mole. Like, you figure out one scam, you come up with, policies, procedures, things to put in place to pop it down, and the next one pops up. So there are a ton of new scams popping up every day. I think with the emergence of AI technology, it is going to get harder with these deep fakes and things of that nature. CJ, I don't want to put you on the spot, but Kraken just came out with, that great report, even on like the North Koreans who were trying to interview with Kraken. And I think that's utilizing a lot of AI technology as well. So not to put you on the spot, but would love your perspective on some of the scams you guys are seeing too.
So we're seeing a lot of scams, and what's interesting is that scams that you'd see is no surprise here, but romance scams, they continue on, which kind of blows your mind. Pig butchering, which is kind of an advanced romance scam, is definitely still in the press, and we're still seeing some of that. And then what was also really interesting is what we're seeing is imposter syndrome. So there was an allusion to effectively AI, creating effectively, Elon Musk's voice, and we're seeing things like that. And as we all know, you can go on to the darknet market and procure anything you want, pretty much, including PII and all sorts of information to set up an account. But what we also saw recently, which was quite audacious, was we saw a North Korean come in and try to actually interview with us and get a job in infotech. And if this person got through the gate, they would have had access to a lot of information, very sensitive information within Kraken. And fortunately, as part of our interview process, you could actually see this on CB News if you Google it. It's a bit of a laugh. The individual was asked on Halloween what his favorite candy was, and whether he was dealing with trick-or-treaters, and he was just stumbling. And then he was asked what his favorite food was in Texas, and he was stumbling. So, I mean, if you have really smart ways of and basic ways of digging out fraud, even by the interview process, you'll be on the front foot. But it's just shocking to me, though, that just like the amount of bad actors that we have out there. And the North Koreans are they're very agile, and they're smart. And they're determined, and so you have to really put up what I would describe as a really good fortress to prevent hacks and other issues that potentially can result in financial crime resulting from you and your activity, as well as potential internal fraud, i.e., somebody who's a bad actor within your company sharing information with a third party to gain financial benefit, which is another issue that we're seeing increasingly in the marketplace, which is quite scary.
AI is here to stay, just like crypto. And people talking about crypto being a great threat vector, people are talking about AI in the same sort of vein, but it's a technology that can be used for good and bad. Where we're seeing a lot of AI usage is, KYC docs. But moving away from, for example, investment fraud, account takeovers, we're also seeing AI used, for example, for CSAM as well, AI-generated CSAM and services and products. So it will be an arms race. It will be whack-a-mole, cat and mouse, as the bad actors take advantage of this great technology. But so will our firms. We all use AI for good and for the benefit of our company and our customers, using it to automate certain manual processes, help us make efficiencies, and at some point might be able to help me write some code as well. So there'll be no barriers to that.
Definitely. Thank you. And I'll go back to another question we were sending beforehand. Maybe I'll start with CJ for this one, but I guess two-pronged question in terms of what challenges do you see, I guess, on a day-to-day basis in your seat managing global teams, and the two-pronged to that in how do you then measure KPIs, KRIs, and kind of success off that in so many different remits and jurisdictions?
So mentioning what I said earlier about running the program like a data-driven machine, relying on automation, but also data which has fidelity and integrity. So it's really important that we do that. And what we've done to manage a global program, it's quite critical, is we've set up dashboard reporting so that we can see just both from an operations perspective, how are we doing relative to service level agreements that we put in place, how are we doing relative to making sure that we don't have backlogs, how are we doing to make sure that, for instance, we're getting SARs filed timely, we're not breaching any regulations. And then on the operations piece, we're also thinking about how do we measure what I would describe as cost per unit. And so we want to make sure that we can measure every widget possible to understand whether we have the right people in seat, as well as whether we need to effectively displace the people by leveraging artificial intelligence and effectively looking to see how we can leverage reg tech. So that's very, very, it's a very exciting time to be here. Some would argue, and I dare I say, is that a lot of entry-level roles we're going to see over time, such as the concept that a lot of coders will no longer have places at the table because there's going to be artificial intelligence and other tech solutions. I do say that for a lot of entry-level operations roles, we're going to see that reg tech and AI is going to be displacing a lot of those roles over time. So if you're starting out in your career, for what it's worth, I would think about how do you try to leverage the knowledge and information that you're going to gain and to add more value and becoming a risk manager. Someone's going to be taking data and information and then connecting the dots, seeing trends, and then trying to determine what it is that you need to do to advance your program to protect your clients and your business. And so running a global business, to roll it all out, for me, it's really important to have that dashboard reporting to make sure that you can scale up and understand effectively the risks embedded in your program. Obviously, you have to constantly do risk assessments and all that as you roll out new products and you enter new geos as well.
Perfect. Thank you. Caitlin, Iggy, you're welcome to add. Please feel free to say no. I can move on to the next question.
I think CJ nailed it.
Yeah.
I was just going to say, be mindful of where you're operating. Too often we see one type of culture set come into a different country and apply their way of working, which may not work in certain local jurisdictions. So be global in your mindset and your view.
Perfect. Thank you. Another question from on the chat from Ian Hutton. This one is directed specifically at Caitlin. What feedback responses has US regulators provided to Chainalysis, given that the general illicit activities in the blockchain, as detailed in the annual crypto crime reports, being under 1%?
You think we're going to get feedback from regulators? No, we have productive conversations with regulators and enforcement agencies, and I think we've testified in front of Congress. We've used these stats to help legitimize the industry. I feel for regulators because they are not living and breathing this 24/7 like CJ and myself and Iggy are. And so it is a really challenging area because the technology is moving so fast that if they create regulation today, they want to make sure that it's going to be in existence tomorrow and a month from now and a year from now. So I do think that they are looking for insights from blockchain analytics companies like Chainalysis to help come up with regulation, but it's definitely slow moving.
I'll finish off maybe perhaps with, and I promise I didn't put this question in, but I'll direct maybe this one to Iggy. What is the role for companies like Danos in this realm, and how can they help?
As I alluded to, sometimes very hard to find the people to staff your team. So we use companies, not just like Danos, there's other consultancies and companies, is just to, as some of my American counterparts would say, have a warm bench, have some flex in your ability to meet different demands and capacity, building out programs, remediation, investigations, and backlogs. So that's where we see a company like Danos and, as I said, other consultancy companies as well. You can't always build it or recruit it in-house. Sometimes you just need the people on the team as soon as possible.
Appreciate it. CJ, Caitlin, maybe anything to add?
The thing that I would add is kind of piggybacking off of what you say, particularly because we're dealing with global companies. It's really important to have diverse mindsets and diverse people from diverse backgrounds, not just crypto, but TradFi, payments, and other walks of life from different backgrounds, because that will add rich context and help to build out a team. And that's where firms like Danos can help to find the best and the brightest, which also would be consistent with the company's goals in terms of hiring. What does a good best in class team look like?
Just about a minute or so off the end here. So what I'll do is I'll wrap this up and thank everyone very much for joining us today. Thank you very, very much to our expert panel, Iggy, CJ, and Caitlin, and for myself, Lucky, and the rest of the Danos group. Thank you for joining us. Enjoy your afternoon and evening.